This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE Roll-Off Trailers and Lugger Trucks, July 30th, 2018. Last week, commodity prices were mixed and many economic reports were very positive. U.S. steel production rose to an almost 4-month high as the U.S. economy remained solid and tariffs remained protecting U.S. steel operations. Oil fell about $2 a barrel to $68.69 on a close balance of supply and demand as global consumption continues to increase slowly with a good economy. U.S. oil production held at 11 million barrels a day, the all-time record that it hit about 2 weeks ago, as prices remain fairly high, making it economical to increase U.S. production. Iron ore rose 50 cents a ton to $67.50, which, like oil, is in a good balance of supply and demand in a slow-growth global economy. Scrap steel #1 heavy melt held again at $342 a gross ton on good U.S. and global demand. Most believe prices could be down $20 gross ton in August, but with strong demand and Nucor announcing their DRI plant down again, this could temper the decrease. Shredders will continue to offer lower prices due to the problems they're having selling the aluminum output they get, which is actually a major part of their profit. Remember, ferrous scrap prices remain more than double what they were 2.5 years ago. Hot dip galvanized steel is actually at now a new multi-year high at $1,210 a ton. A solid U.S. economy and tariffs are bringing good demand, allowing steel mills to raise prices. Copper rose 5 cents to $2.80, a nice recovery from the one-year low of $2.67 of about 10 days ago, as economic jitters are calming down, but as tariffs and China's demand remain in flux. Copper's down 2 cents this morning. The 5-year chart shows we remain near the one-year low that it recently hit. Copper inventories fell again as markets remain concerned about the global growth. Aluminum fell half a penny to 93.2 cents, near a multi-month low on continued tariff nervousness, which has eased a bit, yet with good scrap flow and moderate demand continues. Aluminum LME inventories rose slightly, but near about 8-year lows on good demand. The president announced that there will not be the 25% tariff on imported cars that had been threatened as he struck a truce with the European Union last week. Note, most people do not know that the U.S. has had a very protective 25% tariff on imported pickup trucks for decades. The current conversation has been on cars, not trucks. Congratulations to Steel Dynamics, which owns OmniSource, the second largest U.S. scrap metal recycler. They reported second quarter earnings that were $392 million, more than double the previous year. Strong shipments of finished steel and scrap metal at OmniSource drove higher earnings. Tariffs on steel imports allowed the higher prices, helped bring record shipments, and brought margin expansion. GM and Ford announced that profits have been hurt significantly due to the effect of higher steel and aluminum costs. Tariffs have been great for steel and aluminum companies, but they have been hurting the companies that buy steel and aluminum. The U.S. second quarter GDP grew at a terrific 4.1%, the highest growth since 2014. This was driven by increased spending on durable goods, overall increases in consumer spending, and a huge increase in soybean exports. Overall exports jumped 9.3% as U.S. companies shipped overseas orders just before China, the European Union, and Canada put tariffs on U.S. goods. U.S. consumer sentiment, while down to 97.9% in July, continues the upward trend in general since 2009. Consumer expectations and current economic conditions remain strong, despite expectations of inflation being 2.9% in the year ahead. Wall Street's Dow Jones Industrial Average rose a big 393 points, ending at 25,451. Strong corporate earnings at companies like Amazon and the GDP growth of 4.1% helped drive the increase. As always, feel free to call or email me with any questions. We hope all have a safe and profitable week.